Sorry guys for the delay. We have an integration problem. YouTube is fixed. It taking me like 10 more seconds to get it ready. So I just switched a different broadcasting account. Welcome to F50 Global Insights. My name is David Cao. I'm your host today. We have a special guest, my long-term friend, Raj. He successfully run many different companies, including 4 exits. Welcome, Raj.
Thank you, David. Yes, I have exited a few companies through various cycles. Some of them have been larger than others. I'm currently CEO of Loop Team, and this isn't the first crisis that I went through, but one of the first things I did was go through and read a bunch of playbooks. So happy to share more.
Great. You must see a lot. To run 6-7 companies in the past, there's lots of stories. You must have your glory days and difficult times and maybe crying times. Lots of different things happened. The COVID-19 brought far bigger challenges to startups in different level. It also took far longer than many people were thinking to recover. Based on your past experience, what do you think the challenges the startups are facing, and any suggestions, insights?
So I think the current crisis. So I think when you look at there's a lot of published content on the web around recession playbooks, and I think they're going to say the same sort of things. For me personally, this feels very close to the 08 kind of time frame, 07, 08, and I had a startup back then as well. And I've been talking to a range of, there's obviously one of the things that we don't know yet is how long this is going to draw out. Is this a couple quarters? I mean, right now, at least within surveys, I think people are saying the business impact might be 2 to 4 quarters, but things might start, sort of resuming in terms of business within a year. But I will say downstream, it's looking a lot different. So let me just sort of walk through what I've seen impact me directly, with my current startup. So amongst my investor network, I'm seeing a lot of guidance around making sure you have runway for 12 months, if not 12 months, 18 months, if not 18 months, 24 months. Those that have 24 months are trying to figure out how to get to 36 months. That might be a little bit overextending and maybe not even the right thing to do. But there's definitely a feeling that with the stock market and the economy tanking, there's going to be less LPs around, which means investors are going to be more gun shy making capital calls. So they're not getting their money. And if they're not getting their money, they're not making investments. And so what this has resulted in is pretty much every CEO I know across the Valley, again, everyone I know is mostly startups. So this is from my perspective, early stage startup. Looking at their operating plan and trying to figure out what they can do to save a little bit of money. Fortunately, a lot of them are probably saving rent now that we're all working from home, so at least they can maybe put away some of that lease. But they are going agreement to agreement, saying, okay, is there a force majeure clause I can apply here and maybe get out of this? Do I need this software subscription? And unfortunately, in some cases, they're even going further and maybe doing salary reductions, and if they really have to, letting go of people. There are things like the PPP loan from the SBA that folks are applying to as well. But all of this is under the construct of let's first of all think about this defensively. I'm a pre-revenue startup, and I need to make sure I can be alive until we can until new funding is available. I think from an investor perspective, I think some are claiming that they're making new investments, but mostly what I have seen, or at least what I'm hearing from the inside, is they're just so focused on their own companies. I don't think the early stage folks are making so many new investments. I think it's a little misleading. There might be examples out there, don't get me wrong, but at least if you look at the data from 08, I think the average seed investment size came down in half. The average valuation came down in half, and I think the number of investments came down almost in half as well. And so there's like this huge precipitous sort of slope. So that's the first thing I think people need to think about is like, okay, let's operate as frugally as I can until I can get to sort of revenue, which really leads into the second thing, is how quickly can you get to revenue? Revenue becomes really important in this situation, because your goal now is, how do I move from being a nice to have to a painkiller, and how do I get somebody to pay for this? And this is really difficult to think about, because if you've been operating in Silicon Valley mode for the last 10 years, you've been in a mode where people are paying for users. You have lots of users, you have lots of usage, you have lots of engagement with a promise of revenue down the line. And a lot of great businesses have been built this way, heavily subsidized, just drive user growth. But now if you have to think about, okay, I need to make a margin-driven business out of the gate, it completely changes how you think about things. And I personally have not even had one of those kinds of businesses in a while. My last company was a user growth kind of driven business that was during this sort of last 10 years, and then prior to that in a similar sort of vein. So it is a little bit of a mindset reset, but in many ways you should think about, okay, you're a new company today, here's the money you have to survive 18 months. Now go out and figure out how to get revenue if you're not getting revenue yet, or how to exact or improve your margins. That's the second thing. And this pattern, I've noticed at least, has been true in all of my experiences. So I had some monies with my startup back in 2000, same kind of situation. The dot-com crash, there was no new investor money. I think investors were just trying to keep their own jobs, right? So there's other things going on. Everyone's worried about their stock and whatnot. And those that survived cut, cut's probably not the right word, but they clamped down very sort of deeply and rode it out using revenues, and then got to a point where maybe they started growing again in 03, 04, and in a similar vein in 09, 10. And hopefully this won't last that long. But I think those are sort of my two things, like think about runway and think about how to get to revenue.
Okay, thanks, Raj. Right now, the challenge is that not only the financial expectations changed, but also the environment of doing business changed. And rents is just one of them. And everything go virtual, and lots of businesses are being impacted. So general revenue during a downturn is a pretty difficult time, especially for those people who don't have any revenue at all.
Yes, I'm in the same boat.
So what about for the people has a little bit of revenue, but the revenue was not a goal before? Do you have any suggestions on the current environment? How can they grow their revenue?
I think if they can focus on margin, I think that's a big thing. I think a lot of businesses have been built on kind of low or very poor margins, or basically just spend whatever it takes for growth. But I think right now, to create a sense of security, focus on margin. At least we can kind of get through this sort of downturn, and then it will shift again. I think the other thing too is, if you're in a situation where your margins are good and you have revenue, customer acquisition costs are really cheap right now. Ad budgets have been slashed. Facebook ads are 50% what they were costing 3 months ago. And so it's a great opportunity to do customer acquisition. And also, with everybody working from home, at least what we've seen internally, us being focused on tools for distributed teams, but also other companies that I've heard within the SaaS sort of space, is people are trying a lot of things right now. And I think they have time. And I think part of the reason they're trying a lot of things is all of a sudden they're all working from home and nobody knows if they're doing it right. And so they're looking at other tools that they maybe need to try. They have a little bit more time because they're online all the time. And so I think the top of the funnel should be growing if you're in SaaS at least. And then the question is like, okay, can I then convert these folks a year or two down the line? But let's build up that customer. Let's build up that lead gen base.
So just you mentioned the advertisement cost reduced a lot. What other good aspects, right, positive impact possibility of acquiring users?
Positive impacts. I mean, there's not. I mean, I would never use the word positive with the word
Positive,
COVID.
okay.
But what I will say is it's unfortunately hit some industries a lot harder than others. People have said, and I'm sure you've heard this anecdote, that 20 years of McKinsey consultants, Silicon Valley, whatnot, couldn't get brick and mortar to move digital, but COVID did overnight. The whole industry is rethinking from notary public to education to whatever. How can we run this in a virtual and digital way? And that's a pretty phenomenal thing. The result of that change, this is an opinion, and there's going to be different opinions, but I think is going to be lasting, because I think now there's going to be playbooks formed, and there's going to be infrastructure put into place to handle situations where, hey, we need to shift school virtually for a week. Well, we know how to do this. We did this once before in 2020. We know how to do this. This is the tools we used. This was the best practices, and I can see them iterating and learning in real time as they're experimenting. So I think that's a general positive for the software industry as a whole, where things are moving more online, moving more digital, and I think brick and mortar is going to suffer as a result of that. But I hate to say it in those sorts of words, because right now it's beyond suffering. I mean, the stuff that's going on outside of some of the SaaS, I mean, SaaS businesses are struggling too. But if you look at retail, if you look at the SMB restaurant sort of category, I mean, it's really, really tough. And so I think they're trying to figure out how to adapt. I mean, I saw a company pop up doing house deliveries for mixed cocktails and whatnot. And I mean, these are obviously new things, but it may change for a while. So let's see. But I think at least one positive is the broader brick and mortar industry. I think many of them for the first time are like, hey, we need to have an online plan.
Okay, so for the companies who are not directly, I don't know the word used, positive impact or benefit, but also not so much hurt by the pandemic, their strategy definitely is going online and acquire user. Do you have any more suggestions for them to adapt the new environment?
I think so. Again, some of this is stuff I've just sort of heard, but customer acquisition, I think people have a little bit more time than they did maybe a year ago, or not a year ago, sorry, a month ago. And so if you look at, if you break down customer acquisition, public events and sort of broader networking used to be 20-25% of the lead generation. So going to something like, Dreamforce was a big deal for a lot of these SaaS companies. But all those public events are gone, right? They don't have new business development happening at South by Southwest or CES. Possibly all those things may change. And so,
include us, in case you know, our conference, Global Capital Summit, goes online on June 16th.
Yeah, there you go, right? So everybody's trying to figure out how to go online, and online is great, but obviously one of the trade-offs with online is online allows people to consume it asynchronously as well. And so it's going to be interesting to see over time how the attendance and how the networking works. And I know a number of tools have popped up to try to sort of solve that and make webinars feel more like a real world conference. But all that being said, with 20-25% of existing budget, existing lead generation coming from physical conferences, and those sort of now going away, well, they're shifting that budget. I mean, obviously they're slashing budget too, but they're shifting that budget. And so I think what this is going to result in is people doing more stuff online to try to figure out how to acquire, how to incite, how to gain interest, how to drive growth. And I think the things that are being done, I think people have more time. I think people may feel busy, but I feel now entering the third or fourth or fifth week, depending on what state you're in, you're achieving some sort of Zen balance, hopefully, with your workday. Where you're realizing, okay, I think I kind of found a system that maybe works. Now, if you have kids, I mean, that's a whole nother dynamic. I have little kids too, but hopefully getting past the point where you feel like you're just working all the time. But I think people do have a little bit more time, and people are trying more tools. Let me share a different sort of anecdote, which might help with this. So, we're focused on making distributed teams feel more connected. Prior to COVID, there was only a handful of companies that were fully distributed that were greater than 100 people. Maybe, you could probably count them, maybe 20, 30 companies that were sort of like Silicon Valley that we kind of knew. Yeah, and the same ones would always come up. It'd be like InVision, it'd be GitLab, companies like that. These companies, their cultures, they were very proactive from the get-go in trying to figure out how to function and be productive as a distributed team. Because when you built a distributed company pre-COVID, there was always an impression that you're just not as productive as those teams that are in the office. And so to compete, we have to go out of our way. So they invested in tools, they invested in processes, they created distributed team playbooks and culture. What's happened is with COVID overnight has caught so many people off guard. There's going to be a whole new set of playbooks occurring and created. And I think what's happening is, as I mentioned earlier, I think a lot of these companies just don't even know if they're doing it right. They almost don't even know what they want. It's like, I'm at home, but am I doing it the best way? Is this the right way? Is this what people suggest? They're all trying to figure it out in real time. And we've never had multi-thousand companies in sort of a distributed fashion. And so I think, figuring that out is sort of a key thing that's going to happen right now. And I think that's, just more opportunity as each of these businesses, education or whatever, starts thinking through this.
Okay, so my last question here. So what are your suggestions to the founder himself, him or her?
What are my suggestions to the founder? Yeah. Is this somebody starting a new company?
No, the existing founders.
I'm not a CEO coach by any means, and I shouldn't be. I've had some exits, but they've been smaller. I will say it's been very stressful for me personally, and I think a lot of us are experiencing anxiety. If we have children, that's also added to the stress. I think the key thing, this is me speaking from the perspective of building tools for distributed teams. And so the key thing, in my opinion, is making sure you can create some kind of schedule and some semblance of normalcy. So trying to go to a dedicated part of your house is where you work, trying to be able to turn it off after a certain time, trying to sort of get ready and go to the office that's physically in your home, creating some kind of bounds, because some of the most common feedback that we hear about distributed teams is not being able to create that boundary. And so they feel tired because they feel like they're working all the time. So they need to create some kind of separation. I think that'll be really helpful, and give you at least some time so you can at least just sort of think about how you want to solve this and work through this sort of next 6 or 12-month crisis.
Okay, great. Thank you, Raj. Great to have you today. The video will be published. I'll put some comments there. Thank you, Raj.
All right. Thanks, David. Bye.
Bye.